Hi, it's Brian Decker with your Market Minute. Want to talk to you about the war that's going on in the Middle East and what's going on with shipping lanes and container ships and what's going on in the Strait of Hormuz and in the Red Sea. Over the weekend, a U.S. destroyer ship, along with helicopters and military personnel, clashed with Iranian-backed Houthi militants from Yemen, resulting in U.S. forces sinking the three Houthi ships and killing 10 firefighters. Um, this this all leads up to a problem. I'm going to make a point here at the end, but Houthi rebels have plagued the Red Sea since the Israel-Hamas war broke out, firing sometimes a dozen rockets at U.S. ships. They've seized a merchant ship in November. Damaged another one last month. The escalation seems to have the market's attention. Iran just moved in their Navy's 94th flotilla of warships into the Red Sea today, amid heightening tensions of strategic maritime routes, trying to keep those open. Freight prices have been on the rise for weeks as shippers now are starting to go down the southern tip of Africa instead. That takes 9 extra days, 15% more, $1 million in extra fuel. Rates for these freight containers have more than doubled to $4,400 per container. This has set up a scramble to reserve space for getting things out of China before the factories close, before their extended Lunar New Year in February. All this boils down to this: 15% of global trade moves through the Red Sea, and 10% of the world's oil and liquefied natural gas moves through that area too. The bottom line is that cutting off one of those choke points, just one of them, would potentially knock off more oil from the world market that's ever been done since the Arab oil embargo in 1973. That led to oil prices quadrupling in less than a year. So what the markets are worried about, here's the bottom line: a meaningful rise in prices in the weeks ahead for Red Sea related or any other reasons could change the discussion around the Federal Reserve and other central banks possibly cutting rates, or maybe not. They're going to be watching inflation, which includes oil prices, container prices, supply chain issues that raise other prices. If interest rates are going up, the market's expecting 4 rate cuts in 2024, and those are off the table if the escalation continues. So we'll be watching this carefully.